So, your marriage ends, but the financial entanglement? That doesn't just go away. It gets rerouted right through the IRS. And for divorced parents, tax season can become an absolute minefield. Right in the middle of it all, one deceptively simple but incredibly powerful document, IRS Form 8332. And if you get this wrong, you're not just losing some small deduction. You could be losing thousands of dollars and your sanity. Okay, let's dive in.
This quote from a parent on Reddit, it just perfectly captures that raw frustration, doesn't it? Look, this isn't just about numbers on a page. It's a high-stakes emotional battle where one person's signature can literally hold the other's tax return hostage. The feeling is real, the anger is completely understandable, but the solution has nothing to do with who's right or who's wrong. And here's the absolute #1 truth you have to get your head around. The IRS is not a family court. They don't weigh what's fair, they could not care less if child support is paid, and they are not going to read your divorce decree. They follow a rigid, unbending set of rules, and the master key, the only key that unlocks those rules, is Form 8332.
So what are we really fighting over here? Now, a lot of folks get this wrong. They think this is all about that old dependency exemption. The one that the Tax Cuts and Jobs Act reduced to zero? But oh man, that is a huge and dangerous mistake. We're talking about real cash here.
That's right. See that little form? It's the gatekeeper to the child tax credit, and that's often worth a full $2,000 per kid. So here's the bottom line. While the exemption itself is worth $0, the status of dependent that this form transfers is the golden ticket to claiming that credit. This is a $2,000 standoff, not a $0 one.
Okay, so if you want to win this standoff, you have got to play by the IRS's rules. And here's the problem. Their rulebook is from a totally different planet than the one the family court uses, and that creates a massive disconnect.
And this slide right here, it really lays it all out. The two completely separate universes we're dealing with. On one hand, your divorce decree might say, hey, the non-custodial parent can claim the kid if they're up to date on child support. But the IRS, nope. They only care about two things: who the child lived with for more nights and who has the signed Form 8332. That's it. Your state court order means nothing to them. It's not the currency they accept.
And this definition, it is everything. The IRS has this super strict thing called the physical presence test. Basically, whichever parent the child sleeps at their house for more nights, even just by one night, that's the custodial parent for tax purposes. It doesn't matter who has legal custody, it doesn't matter who pays for everything, it is a simple, brutal head count of nights. And whoever wins that count holds all the tax cards.
So what happens if the other parent, the non-custodial one, wants to claim the child? They need the custodial parent, the one who won the night count, to sign that right over. And this is where the incredible power of Form 8332 really shines. It is the one and only document the IRS will recognize for this transfer. Seriously, you could attach your entire divorce decree to your tax return, and it would be completely worthless to the IRS.
All right, this brings us to probably the biggest, most expensive mistake that people make. They think, okay, I'll sign this form, but I'll tie it to them paying child support. Well, a huge court case proved that as far as the IRS is concerned, that's just a flat-out lie.
Let's look at this real-world case, Armstrong versus Commissioner. A dad's divorce decree said he could claim his child, but only if he was current on child support. And he was. But his ex-wife refused to sign Form 8332. So he just attached the court order to his tax return instead. So what do you think happened when he filed his taxes?
Yeah, it was a total disaster for him. The IRS took one look and said nope and disallowed his claim. And get this, he fought it. He fought it all the way up to the 8th Circuit Court of Appeals, and they still sided with the IRS. And you want to know why? Because his court order was conditional. It said he could claim the child if he paid support. The IRS demands an unconditional release.
And there you have it, straight from the court's mouth. The signature on that form, the release, it has to be absolute, unconditional. It can't say, I won't claim the kid if you pay me. No ifs, ands, or buts. The big takeaway here? The IRS is not going to be your personal enforcer for your divorce decree. Period.
Okay, so let's flip this around. What if you're the custodial parent? You signed Form 8332 for future years, but now your ex has stopped paying support. You can take that claim back, right? Well, yes, but there is a nasty little trap just waiting for you.
This happens all the time. You signed Part 2 of that form, releasing the claim for all future years, and now you are seriously regretting it. So what do? Well, your only move is to use Part 3 of that very same form to revoke your release. But the timing, the timing is everything. And these rules feel like they were designed to trip you up.
Just look at this timeline. It is absolutely brutal. So you send the revocation in, say, July of 2025. But here's the killer detail. The law says that revocation doesn't actually kick in until the tax year after the year you send the notice. You know what that means? Your ex, who isn't paying you a dime, gets a free year. They get to legally claim that $2,000 credit for 2025, the same year they stop paying you, and there's not a single thing you can do about it with the IRS.
And here's the actual form itself. You can see it right there, Part 3, the Revocation of Release of Claim. And it's not some hidden rule. The instructions are printed right on the form. It says the revocation takes effect no earlier than the tax year following the year you give notice. Now, I guess the idea is to give the other parent time to adjust their tax planning. But in reality, it's just a painful trap for the parent who's not getting paid.
So, after hearing all that, you're probably wondering, how on earth do I protect myself from this mess? Well, the good news is, you absolutely can. But it's not about being nice or fair, it's about having a precise, almost forensic strategy.
Okay, listen up, because this is the #1 hands-down best strategy for every single custodial parent. Are you ready? Never, ever sign Part 2 for all future years. Only sign Part 1 for the current year, 1 year at a time. What does this do? It forces your ex to come to you, hat in hand, every single January to ask for that form. And if they've stopped paying support, the answer is a very simple, very powerful no. You don't have to mess with revocations. You just don't sign. Boom. That gives you instant leverage and lets you completely bypass that whole free year trap.
But okay, what if you're listening to this and thinking, oh no, I already signed the multi-year release? Don't panic. You just have to follow this revocation protocol like a detective. The second you decide to revoke, you fill out Part 3. Don't wait. Then you send it via certified mail with a return receipt requested. That little green card that comes back in the mail, that is your golden ticket. It's your proof. Staple it to your copy of the form.
So why am I making such a big deal about certified mail? Because you have to think ahead. Imagine the IRS sends you both a letter because you both claimed the child. Your ex can just lie and say, I never got it. If it's just your word against theirs, you're going to have a bad time. But if you can pull out that signed, dated, green receipt card from the post office, the argument is over. You win. That's the hard evidence the IRS is looking for.
So after all this, what's the one thing you really need to remember? It's this. In the eyes of the IRS, procedure always, always beats fairness. You can't count on a judge's order or what you think is right. You have to control the paperwork, control the document. When you understand these super rigid rules, you can protect yourself, you can avoid these traps, and you can make sure that money ends up where it's supposed to. It really makes you wonder, though, after seeing all this, doesn't a system that so often punishes the parent who's actually following the rules need a serious rethink?